But no matter what asset class we're looking at, we have a problem here because a lot of the low-hanging fruit on all the major asset classes, in my opinion, has disappeared. Rob's talked about how low interest rates are, and there's no question about it. Regardless of whether you think they're going to rise or fall, right now, if we take a look at that line, this is the interest rates now essentially show no return over inflation in virtually any country. With respect to the stock market, is it expensive? If you use the Case-Shiller index, which is a more conservative price-earnings ratio, the stock market is the most expensive it has been in the last century, except for the dot-com bubble. So it's the same price it was in 1929 and higher than it was in 2008. And if we take a look at real estate, cap rates are as low as they've been at any time in the last 30 or 40 years. So cap rates indicate the income that you can earn on a piece of real estate without leverage. So there's no low-hanging fruit. So what does that mean? I mean, what do we have to do as a company for our clients in order to deal with this is our reality? It's the winter that Rob was talking about. So in terms of fixed income, we have chosen to invest both in commercial mortgages and private debt as a way of getting a better risk-adjusted return on fixed income. In terms of equities, getting our asset allocation right and not having too high an exposure to equities, value investing, dividend growth, and making private equity part of the equation. Something that's interesting, one of the best pension funds in our country, and arguably one of the best in the world, is Ontario Teachers. And we just received some news about their returns last year and also their asset allocation. And in the last 10 years, they have doubled their exposure to private equity, reduced their exposure to public equity, so now they have exactly the same percentage in private and public equity, which is far more than most individual investors would have. And then in terms of real estate, we're finding that we need to look at assets, certainly David alluded to them, build-to-own assets, value-add assets, and in any event, regardless of which one we choose, modest leverage. This is not the time to be looking for home runs.